Hello, good morning, and welcome to another exciting moment where we talk about business. It is Business 360, and my name is Blyden Okem. In Business 360 today, we'll look at the top stories in the world of business, beginning with India, and we move straight to the talking point. Rising from the bare expanse of the large salt desert that separates India from Pakistan is what will likely be the world's largest renewable energy project when completed 3 years from now. The solar and wind energy project will be so big that it will be visible from space, according to developers of what is called the Vashta Renewable Energy Park, named after the village nearest to the project site. At the site, thousands of laborers install pillars on which solar panels will be mounted. The pillars rise like perfectly aligned concrete cactuses that stretch as far as the eye can see. Other workers are building foundations for enormous wind turbines to be installed. They also are transporting construction materials, building substations, and laying wires for miles. Let's find out details regarding this.
This park will be the world's largest renewable park, which is a combination of solar and wind at a single location. As infrastructure and energy grow, we in the past have set up large number of complex, and big projects. Of course, this will be the largest and the most complex project, not only for Adani Group, but I presume that will be one of the most complex project in the world.
Meanwhile, Bill Gates says he's a huge investor in nuclear fusion and fission. He spoke on the sidelines of the COP28 summit in Dubai. Let's hear from the man Bill Gates.
Either nuclear fission or fusion to be safe and broadly accepted, and if we can get either nuclear fission or fusion to be safe and broadly accepted and very economic, because it's not weather dependent, it would be very complementary to the large amount of solar and wind that we're putting into our electric system. And so I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Well, talking about Israel-Hamas war, Palestinians run out of places to go as Israel urges more evacuation to widen offensive in Gaza. Israel's military has renewed calls for mass evacuation in southern Gaza as it widened its offensive aimed at eliminating the territory's Hamas rulers, pushing Palestinians into a progressive shrinking portion of the besieged territory. Let's also have details of this. Not a good situation in the Gaza Strip, and quite concerning. In the world of business, it's already causing tension in global businesses, from the oil market to the gold market, and it's that concern. While in Africa, Italy has committed a new €5 million to support Africa's sustainable energy initiatives through the special fund of the Sustainable Energy Fund for Africa. The new financing is to deliver sustainable and reliable energy access across the continent. More than 600 million Africans lack access to energy, resulting in the electricity access rates of just over 43% for African countries, the lowest globally. Italy's contribution aligns with the broader goals of COP28, particularly the objective of tripling the deployment of renewable energy in Africa. Now to Kenya. Members of Kenya's parliament are pushing for a law that would allow for the taxation of the country's crypto traders. The bill in question, if passed, will ensure that an estimated 4 million Kenyan cryptocurrency traders would be taxed. Kenya's government has remained adamant on regulating the country's crypto market. A Kenyan parliamentary has given an outlook. The committee advances a bill to tax cryptocurrency traders, and the proposed law targets an estimated 4 million, as already said. The move was driven by concerns over the lack of regulation in the sector. In Zimbabwe, Zimbabwe is using the funds generated from its platinum exports to repay a $400 million loan from the African Export-Import Bank, as a financially strained nation leverages its mineral wealth to establish lines of credit. In February, the government aims the said amount, the loan agreement with Afreximbank for budgetary assistance and the funding of trade-related infrastructure. Meanwhile, Zimbabwe has been facing difficulties in getting loans from international financiers. Repayment of the loan involves using 35% of Zimplat export proceeds, overseen by the Reserve Bank of Zimbabwe. In South Africa, the South African government has revealed that the country's automotive industry will likely produce its first electronic vehicles, EVs, in 2026. And one of the pillars supporting South Africa's just energy transition, JET's plan for building a low-carbon and climate-resilient economy is the electrification of transport. According to the JET's plans, a 128.1 billion rand, an equivalent of $6.84 billion investment, will be required between 2023 and 2027. South Africa stands as the foremost automotive manufacturing hub on the African continent. Back to Uganda. Uganda's financial sector is experiencing an interesting development given the wave of financial inclusivity via cashless payments that is currently sweeping through its economy. A recent report showed that cashless payment is beginning to catch on, and 80% of mobile transactions are done by people in the informal sector. MTN Mobile Money's director applauds growth, noting that it is encouraging. However, there exists the issue of high volume, low value payment within the sector. Back home in Nigeria, Nigeria's foreign exchange reserves has fallen by $1.6 billion to $32.97 billion since the Central Bank of Nigeria (CBN) announced the unification of the exchange rate to unify the country's foreign exchange rates. As of June 15, 2023, when the naira was allowed to float, the country's gross FX reserves stood at $34.62 billion. However, the foreign exchange reserve fell to $32.97 billion in 2023, shedding $1.65 billion according to data from the CBN. The decline in the FX reserves has been blamed for the fall in the naira rate and has been attributed to the limited capacity of the country to earn foreign exchange from both non-oil and oil exports and increasing FX demand, which has seen the naira weaken by more than 40% since June. In July, the Apex Bank noted that accruals to external reserves remain weak while foreign exchange demand pressures persisted. Still in Nigeria, an analysis of the 27.7 trillion naira budget document recently presented by President Bola Tinubu last week revealed that the country's 2024 budget, christened Budget of Renewed Hope, showed that the figure allocated for the Office of the Chief of Staff is a 97.5% increase from the 517.95 million naira in 2023. A broader breakdown indicated that the presidency will get 272 billion naira, comprising 176.92 billion naira as personnel costs, 34.22 billion naira as overhead costs, and 60.53 billion naira as capital expenditure. This is an 83.59% increase from the 148.16 billion naira budgeted for the presidency in 2023. Meanwhile, Bolt, a ride-hailing company, has disclosed that it has suspended more than 5,000 drivers in the last 6 months due to non-compliance and safety-related issues in Nigeria. The country manager of Bolt, Yahaya Mohammed, who revealed this at a press conference in Lagos recently, said the firm was intensifying safety measures on its platform with dedicated focus on riders and drivers. He noted Bolt allocated over 20 million naira to enhance safety features, introduce advanced reporting mechanisms, and conduct driver and rider awareness programs. But here we'll draw a closure to the first break regarding Business 360, and when we return, we'll look at global economy all around the world. Don't go anywhere. Welcome back. It is Business 360 and my name is Blyden Ukem. Now to global economy and the markets, beginning with Australia. The Australian economy expanded 0.2% quarter on quarter in the third quarter of 2023, below market forecasts and easing from a 0.4% gain in the second quarter. It was the safest and the softest pace of growth since the third quarter of 2022, as fixed investment grew slower amid negative contribution from net trade, while household consumption was flat. Annually, the GDP grew by 2.1% faster than expected. In Africa, the Central Bank of Kenya lifted its benchmark rate by 200 basis points to 12.5% at its meeting on December 5, 2023, surpassing and surprising analysts who had predicted it to remain unchanged at 10.5%. It was the first rate hike since June this year, bringing borrowing costs to the highest since October 2012. Policymakers stress the importance of adjusting the monetary policy stance to manage exchange rate pressures and alleviate secondary effects, particularly those stemming from rising global prices. The central bank noted that Kenya's headline inflation was broadly unchanged at 6.8% in November compared to 6.9% in the prior month, but has remained sticky in the upper bound of the target range since July 2023. Meanwhile, the annual inflation rate in Tunisia eased for the third successive month to 8.3% in November 2023, down from 8.7% in the prior month. It was the lowest reading since July of last year, as food inflation decelerated to a 15-month low of 11.9% in October. There were also softer rises in prices of furnishing and household equipment. On a monthly basis, consumer prices inched up by 0.3% in November, marking the softest rate since February 2022, following a 0.7% gain in the previous month. Furthermore, the core inflation rate, which excludes volatile items, stood at 7.3% in November, slightly lower than the 7.4% rise observed in October. Quickly, let's move to the charts indicating inflation rates in Tunisia. The charts this morning. According to statistical reports, as of January 2023, inflation in Tunisia stood at 10.2%, beginning to drop slowly to 10.1% in April this year, and afterwards dropping slowly to 9.1% by July and 8.7% in October, and currently 8.3% in November, indicating a drop in the prices of commodity and a stronger currency in Tunisia. Now to the markets. Beginning with commodity. WTI crude futures held below $73 per barrel today, hovering near the lowest level in 5 months, as surging U.S. crude exports raise worries about increased global supply. Data showed that U.S. crude exports are nearing a record 6 million barrels a day, with flows to Europe and Asia showing steady increase. Oil prices have also been falling since OPEC Plus announced its output cuts last week, amid doubts on whether the latest decision would have a significant impact on the market. Meanwhile, Russian Deputy Prime Minister Alexander Novak said that OPEC Plus stands ready to deepen oil production cuts in the first quarter of 2024 to eliminate speculation and volatility if existing action to reduce output were not enough. And quickly we move to the market, beginning with the energy market and afterwards the metal and the agricultural market. Let's talk about the markets this morning. The energy first. The energy commodities showed crude oil price at $72 as the West Texas Intermediate crude gaining slightly a 0.1% increase this morning. For Nigeria's price benchmark Brent crude, the current price is $77, upward by 0.04%. Natural gas, gasoline, a little here, a little there, heating oil, also a slightly upward, and coal price slightly downward. Now to the metals. The price of gold in the metal market. The metals. Looking at the metal market and the action that could come with it, gold price stands at $2,030 per ounce, upward by 11.66 points. Silver price $24 per ounce, upward slightly by 0.079 points. A copper a little here, a little there. Steel price gaining 9 points. Iron ore 0.5 point increase, and lithium downward by 5,000 points. The current price for lithium is 103,500 Chinese yuan per ton. And now to the currency market. Beginning with the Chinese currency, the yuan. The yuan gains as state bank supports. The offshore yuan appreciated to around 7.16 per dollar, recouping some recent losses as China's major state-owned banks reportedly resumed selling US dollars in the onshore market to boost the yuan. The currency has come under renewed pressure in previous session after Moody's downgraded its outlook on China's government credit rating from stable to negative, citing economic uncertainties and property market risks. Investors now look ahead to Chinese trade figures and the latest inflation report later this week for further guidance. But quickly, let's move into the market, the euro against the US dollar, and afterwards we'll talk about a cryptocurrency market before talking about the Nigerian currency, the euro against the US dollar first. While anticipating the market, let's also look at perspectives different from many anticipated. The euro against the US dollar. The price level is at 1.077 points, a slight decline of a negative 0.18%. For the pound against the US dollar, still within the 1.25 point mark. Let's look at the cryptocurrency market, what the prices are for Bitcoin and the rest of the currencies. For the digital coin, Bitcoin price is at $43,827 for one Bitcoin, downward by 64 points after recent increase at a negative 0.15% this morning. Ether price is upward by 2.1 points. Market is moving quite fast. $2,274 is the price of one Ether. Binance gaining 3.6 points, a little here, a little there. Well, looking at Naira, the Nigerian currency. Again, Nigeria's currency, the Naira, gained almost against the US dollar on Tuesday at the official foreign exchange market. Official data from FMDQ disclosed that the Naira appreciated 806.73 Naira per dollar on Tuesday from 837 Naira 77 kobo per dollar on Monday. This represents a 31.04 Naira increase in the local currency compared to the 837 Naira 77 kobo per dollar it closed on Monday. The appreciation represents the second time the country's currency has been strengthened this week. The development comes as forex turnover at the close of trading on Monday stood at $73.94 million, representing a 32.87% growth compared to the previous day. Meanwhile, the Naira depreciated marginally at the paro market, exchanging at 1,170 Naira per dollar on Tuesday from 1,165 Naira per dollar the previous day. Let's get to the market and see what the price is for the Naira as it battles against the US dollar, and afterwards we'll look at the paro markets. The market this morning has shown the price level for the US dollar against the Naira at 801 Naira to the US dollar. The struggle continues somewhat for the Naira. The euro against the Naira, the euro is going on a decline, a negative 10 point decline. Against the Naira gaining that points over the euro, 854 Naira equals 1 euro. For the pound against the Naira, the price level is at 995 Naira to the pound, and the pound struggled against the Naira, losing 12.26 points in the market. Now to the paro market, where the prices are this morning. Looking at the paro markets, the dollar to Naira indicates buying rates at 1,168 Naira to a dollar and 1,162 Naira at the selling rate. The pounds to Naira indicates a price level at the buying rate of 1,459 Naira to the pound and the selling rate 1,445 Naira. Meanwhile, the euro to the Naira, the price level stands at 1,257 Naira to the euro in the buying rate and selling rate 1,241 Naira to the euro. While in the stock market, the Asian stock rebounded this morning, but the details of the market has had different angles. The Asian equity market rose today, recouping losses from the previous session as the risk sentiment improved. Investors also assessed data showing Australia's economy expanded 2.1% year-on-year in the third quarter, exceeding forecasts for a 1.8% growth. In Japan, a private survey showed that sentiment among manufacturers improved markedly in December as the auto sector continued to recover from last year's semiconductor shortage and supply chain woes. Shares in Australia, Japan, South Korea, Hong Kong, and mainland China all advanced this morning. And here we draw the curtain on today's edition of Business 360. Thank you for being a part of it. My name is Blyden. We return tomorrow for further conversation.